The US Federal Reserve has decided to keep its stimulus program in place for the time being, offering no clarification on when it will begin winding it down. But with growth widely expected to pick up in the latter half of the year, economists say a tapering off of the stimulus may not be that far away. Our Yoo Li-an reports.
The U.S. Fed has given no indication that it is planning to reduce its bond buying in coming months, saying only the economy is still in need of support, although it continues to recover.
More generally, with the recovery still proceeding at only a moderate pace, the economy remains vulnerable to unanticipated shocks, including the possibility that global economic growth may be slower than currently anticipated.
In the statement following the two-day meeting on Wednesday, the central bank cited some unconvincing economic indicators for keeping the stimulus in place for the time being. It downgraded the pace of recovery in the first half of the year to modest from moderate and pointed to low inflation that's been hovering just over 1%. Policymakers see low inflation as a risk to economic performance. The Fed also took note of the rise in mortgage rates, which could dampen growth in the housing market. Despite the Fed's dovish stance, economists say it may start dialing back its stimulus in September, as expected by many. Earlier on Wednesday, the government announced that the economy grew 1.7% in the second quarter of this year. That's up from 1.1% from the previous quarter and much better than many economists had expected. Looking forward, the Fed says it expects economic growth will pick up from its recent pace. Since last December, the Fed has been buying $85 billion in Treasury bonds and mortgage-backed securities a month. Back in June, Fed Chairman Ben Bernanke said it will start paring back the monthly purchases later this year and rid of them completely by mid-2014, as long as the economy shows solid growth. Yoo Li-an, Arirang News.